Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Raidinero, and we are back at it again for another bag talk. I'm sorry I missed you guys yesterday, but I was doing research for this episode because this is a request and I take my requests seriously. And we've been busy at my 9 to 5, which we're actively working to create some space to where I can focus in on my requests. But you guys send me requests. I have conversations with you guys offline. Those of you who are tapped in with me on my socials, which are down in the descriptions, I'm actually going to rearrange the descriptions so that way it's easier to find that stuff. But I had a request for an episode specifically for my blue collar family, as I am currently a blue collar worker, which is part of the reason that we missed yesterday. We're actually in a construction phase on a project, and I am coming home absolutely beat. Today was no different, but yesterday, I was finalizing some of my research for today because this is going to be an important episode. Now, this is for my blue collar, quasi high earner. Actually, I would say high earner because specifically the person within my network that's in the wolf pack that asked me about this drives trucks. And I've got a few friends that actually are truckers. So I know you guys make good money. All of you make more money than me, taking away from my investment prowess. If we're just going W2 to W2, I don't make that much money. So those are just the facts. It's what it is. You ain't got to lie to kick it. I'm not sitting around here acting like I'm a high earner. I built myself to where I am, and I'm continuing to build myself to where I'm going. That said, there's a lot of high earners that are not worth as much as me, that are not building the net worth that I have, that are not in the same position. And that's not to take away or discredit anyone's situation. It's just the truth. Not everybody is good with money. Actually, most people aren't good with money. The wealthy are the 1% for a reason. And I understand it's a lot easier to say that there's some nefarious plot so that none of us can get ahead. But something that I found that's pretty interesting is the way that I navigate with money is counter the way 90% of society navigates with money. And the results that I'm getting are leaps and bounds away from the results that most people, a lot of which who make more in W2 income than I do, are getting. Because you're making $100,000 a year and you're saving maybe 10. You're investing maybe 5, maybe 10. Maybe you're not saving and maybe you're just investing. And you're investing in a means of like a retirement plan, a 401k that you don't get until you retire. Well, that makes it so that you don't have the ability to retire until you're old and about to be off this planet, about to head to the room upstairs. Me personally, I wanted to be out of that position of having to work as soon as possible. So, I'm counting down the months, which it is what it is, but I'm doing some things that are way different than the standard person is doing. And I got asked specifically, I got given a couple of positions, and I went through, disseminated it down, and looking at the numbers, I found some stuff that I like. And kind of applied it to the strategy that I'm building. Now, as we all know, I am fully invested. This is going for somebody who is probably not fully invested. So the breakdown that we're doing here, since this is geared towards my high value, high earning, getting to the bag blue collar workers, like I am I'm not getting to the bag. Now, if I wanted to press the issue and go fight about it, I probably could. I definitely, obviously, they say that you have to job hop. I am not an avid fan of job hopping. I don't like having to retrain people how to work with me. And considering I've got 16 months left, I'm not really that incentivized to do so. Like, I already know that there's a light at the end of the tunnel for me should I not want to go to work. I don't have to go to work any longer. But I digress. We're going to go ahead and jump into the blue collar playbook. Now, this can be applied to everyone because all of this scales. Obviously, it will just take longer if you have less income doing it this way. The way that I am currently doing it, if possible, getting to fully invested, that will speed things along. Looking at this setup and this layout, after doing some research, I have started implementing some of these moves in my personal playbook because as I'm wanting to de-risk my portfolio, some of these options are coming on to the radar. So this is actually what I'm working for. I'm going to call this the Dinero Alpha Playbook. Now, the structure of this is exactly what I am doing currently. I'm going to just go ahead and leave that at what it is. Now, the driver that I spoke to specifically that asked about this, I think we were parsing this out at $500 a week because you guys get paid weekly. My truckers get paid weekly. Obviously, for those of you who are not getting paid weekly, these numbers are going to be different also. Go ahead and leave that where it's at. I got to get my trusty, dusty calculator out here because I got to do the quick maths. So we're talking about $500 a week is what we're basing this around. By the way, if you have not liked the video, go ahead, like the video. If you haven't subscribed, especially if you've been here more than twice, go ahead and subscribe. I'm trying to make these flow a little bit better, get straight into it. I'm trying to add as much value as I possibly can for my community because I'm not trying to get rich by myself. I'm also not paid to be here. So it kind of is what it is. The people that rock with me. Those of you that don't, cool, more power to you. Feel free to give commentary down in the comments. I do actually read them all. I know everybody on YouTube says that, but everyone who's commented, I have replied to your comments. So I do take time out to do that, especially when you have a smaller community like I do. There's no reason not to, and there's no excuse not to. And I will continue to do that until it gets to the point to where it is asinine. And then I will jump in there as I can. But most of you who rock with me, those of you that rock with me heavy, you reach out to me on social. So I talk to you guys throughout the day anyway. So anyways, let's go ahead and jump into this. So the first thing we're going to talk about, you got $500 a week. The first thing that I would do, and this is something that I do with my check now as being fully invested, I still do this. And this is the bare minimum in my opinion. Just saying. 10% of that, it's going to be $50 out of your $500, is going directly into spot Bitcoin. Not the Bitcoin ETF, not Bitcoin, anything else. You want all of that 10%. I look at it, and me personally, the way that I invest, it is in place of my 401k, my Roth 401k, any of those things, because I don't need middlemen in between me and my Bitcoin because that's my retirement plan. And at minimum, and I'm taking this assumption as though you are just starting out. This is if you were just starting today. So this first 500 come in, hot 50, go buy spot Bitcoin. You can buy fractions of Bitcoin. Start buying. Specifically, the place that I would use for that is Strike. And I have a referral down in the comments for those of you who are not set up. And I'm going to pull that up and share it so that we can get some visual on it. Another good thing about Strike, we're going to go ahead and jump on in there and do this one first because this is where your Bitcoin lands. Now, I am a very big advocate. For those of you who aren't looking, I've got the Strike app page pulled up. It's simple to set up. It's simple to set up direct deposits. it puts your Bitcoin somewhere where later on down the road it can be utilized. We will come back to this later. It's going to be a part of the bonus. And also, I made banners for this also. And this is going to be your foundation layer. This is the bedrock that everything stands on. And the 10% is a minimum. These numbers are the numbers that I'm currently using. I buy Bitcoin all the time. I already have a whole Bitcoin. I'm a whole coiner. So for me, dialing it back at minimum, 10% of all the income that comes in goes into Bitcoin. When I make money in some of these other layers that we talk about, that also goes into Bitcoin. It is my means of saving. So all roads for me lead to Rome. I do not save in dollars. I do not I don't save in dollars, basically. Every dollar's got to be working. It's got to be working harder than at the bank, because at the bank, you're just going poor slowly. So the next hot 50 or however many shares you can get. Now, this strategy will be easier to run on Robinhood. And I know a lot of people are going to be like, oh, like, well, we're not trading. We're not doing options. Robinhood has a great platform for what we are building. And if I was starting out now, that is the platform that I would be on, because it's liquid. It's very liquidity. They have a lot of wealth service, private banking services that you'll have access to. I would do a Robinhood account for this next phase, because all the stuff that we're talking about moving forward is traditional finance. Back to the Bitcoin. While you're storing on here, I would never keep over 0.25 Bitcoin on any platform, including this one. And I love Strike, but you'll be able to do everything you need to do when we get to the bonus point part at 0.25. Over 0.25 Bitcoin when you get to there. That should be a target of 0.25 Bitcoin at this point. I would say get to 1. A lot of you ain't going to make it at this point. That's just what it is. We're still early, but honestly, as far as easily acquiring a whole Bitcoin, y'all are late. It's what it is. So for me, that minimum threshold should be 0.2 to 0.25. And I understand there's going to be videos telling you only need 0.1, whatever. I'm telling you, based on my opinion, my 2 cents is having a whole Bitcoin and working towards getting 0.25 now. It's doable, because I'm not making more than any of you guys. Secondly, it's going to be important moving forward. And honestly, the whole premise of this, like I said, all roads lead to Rome. I am a Bitcoin standard believer. I understand people don't agree that I am, because not everything I do touches Bitcoin, but this strategy, everything touches Bitcoin. If you have taken the orange pill and you've gone down the rabbit hole, this is going to be a strategy that completely aligns. Unfortunately, I am not a high income earner yet. Well, I mean, I guess technically I am if you're counting what I'm doing in the stock market now. But for those of us who are not high earners, meaning you're over 6 figures, this strategy is a slower burn. And me personally, I'm doing everything I can to get as much Bitcoin as I can. So I am running my portfolio a little bit hot. Next week, we're going to have our financial updates, and you'll get to see the results of it. But it is what it is. Like, you have to cater this to your specific situation, and that is very important. But buying Bitcoin and trying and striving to get to 0.25, definitely a great idea. In my opinion, I think it'll be life-changing. I know that getting to a whole Bitcoin was life-changing for me before it was worth what it's worth now. So we're going to leave that at that. So the next thing we're doing, and again, like I said, moving forward, all the rest of this, I would probably be building out on Robinhood. I would be getting integrated into that. Robinhood also is now offering banking services. Along with that, I would pay the $50 a year to become a gold member, and we will talk about that in the bonus section as well. Now, moving on, the next $50. Actually, I would say the next $150, and we're going to go into why. Next $150, I would put into iBit from iShares. Now, this will seem kind of redundant. And the reason being is you're buying spot Bitcoin ETF now. Now, the reason we're actually, you know what? Correction. We're going to go $100. $100 into iShare. Now, I don't edit my videos, so we're taking that 50 back. We're taking the 50 back. We're going $100 into iShare, into the iShares iBit Bitcoin ETF. Now, you're buying spot Bitcoin in the ETF version. I am not generally a fan of this, but, and I'm doing my homework on this one now, but I'm 80% sure that this is going to be accurate. But what we're doing is, let's see, and this is one that you will not see in my portfolio, just so you know. Like, I will not buy this personally, most likely, because I have other positions that do this with the way that my portfolio structure is set out. But again, this has to be Bitcoin focused. That was the constraint that I was given. So what we're doing is we're buying $100 of iBit. Reason being, this is building your leverage base. Now, over on Robinhood, until you get to $2,000, this doesn't even matter to you. You're building up towards $2,000. So now you got $100 over there. The next thing that we're going to do, because this is, like I said, this is very redundant. The next thing we're going to do is add the old razzle dazzle, the spice of life. Now, this is going to be a twofer. We're going to take $50 and we're going to buy MSTR. This is a leveraged Bitcoin play. So it's about 1.5 to 3x whatever Bitcoin's performance is. As you can see, I've got the stats up here for it. Today they went up 10%. This is the spice of life. This also adds to your margin pool when you get to $2,000. The next 50, we're going to STRC. Now, this is the cash savings. Okay, so you've got 10% going into your, this is what I'm looking at as my checking account, basically. This is the dry powder. It sits at around $100. You're going to get an 11.5% return at present. It's generally around 10, but it varies based on where the price is. That means the price does vary a little bit. It goes between, I'd say, 101, 102 and 90, 95, $90. Again, this is your $500 a week investment. You're a high earner. This shouldn't hurt you. This isn't money you got to look at. So you don't even have to check the market that often, for real. You got to disperse this once a week. This is the cash value. Again, also helps your margin. Now we're starting to put some income. Now, this layer is the collateral layer. I keep forgetting to switch these. But this is the end of the collateral layer. So iBit, MSTR, and STRC are your are your collateral layer. These positions are specifically to have your margin going and keep it semi-stable. Now, we are not advocating using the margin to the hilt, but one of the focuses here is to never have to spend your Bitcoin. So that $50 that you're using to buy actual Bitcoin, we're not trying to spend this money. We're breaking the ideology that the only way that you can be wealthy as a working class person is to hoard as many assets as you can and then sell them off until you die, so there is nothing left to be passed on. We're deading that ideology. And honestly, I should have pulled that up for this too. Drip. Hold on a second. I'm doing it right now. But this is a great segue. And so we're starting with a hot 50. We're doing this weekly. And we're going to say the extra investment's a hot 50. We're going to do this. Okay. Now, see, this is where it gets interesting because now we're at the end of the collateral layer. But let's look at what this little bit of collateral that we're doing is going to do for you over these years. So this is based off of our initial investment of $50. Dividend yield is 11.49%. You're getting that dividend paid out monthly. Now, this calculator, it's dripcalc.com. I will put it in the comments, or not in the comments, in the description below the video. So like you guys can tap in and you can run your numbers yourself. But we're doing a $50 initial investment. Share price is $100. Dividend amount is 95 cents, which gets paid out monthly. Dividend growth rate of 43.5%. These are the calculations based off right now. So you can project these out right now and you can update this calculator monthly or quarterly. I kind of use this to figure out my positions and how we're looking at it. Now, the share price growth, actually, I want to take that out because STRC is not supposed to grow. And actually, I'm going to take out the dividend growth rate. It's calculated then. Okay, that's more realistic. Okay. And this is adjusting off of their data also. So we took away the dividend growth rate. It's just gonna stay pegged at what it is. So the first year, and this will break it down. Year one, the starting balance is $50. Total dividends of $161. At the end, you end up with 26 shares. Total imbalance, you got $2,611 at the end of the year. That's going with $50 a week at the end of your collateral. And then look at how this compounding starts helping you. And this is just one position over 5 years. Year two, you're ending with 55 shares. You've got $5,482. Year three, that goes up to 87 shares. And again, $50 a week, people. And this is keeping everything flat. This is no growth on the dividend, no growth on the position. It just stays pegged at $100. It does not just stay pegged at $100. But again, that's what they're putting out here. So you're 87 shares, $8,701. Again, that dividend growth, year one, $161. Year two, $471. Year three, $819. Which obviously coming in monthly does not really matter that much. But if you're reinvesting, and this also is Oh, there we go. Okay, so this is based on so this is based on no drip. So this is you just adding the $50 actually. Or yeah, and dripping now on this position, I would say we're going to keep the drip. I would recommend dripping, which for those of you who don't know what dripping is, that is direct reinvestment plan. That's where the dividend comes in and you reinvest that dividend amount. I highly recommend that with the STRC position. That's how I do it. And honestly, if this is a hot five, if this hot 500 you don't need, and this is money that you actually don't need and you're just investing, I would drip everything, to be honest, because you don't need the money. So, and it compounds faster and you allow the compounding. So now off this one position, you've got $16,357 in 5 years. And the reason we use this as part of our collateral layer, and we're looking at things as collateral. You talk to people, they're buying investments. I'm buying investments. We are conditioned to sell investments, to be honest. We are buying collateral. We borrow against it. That's $16,000 that you can borrow against. You can pull out of a cash pool, not sell the stock, not create a taxable event, not pay taxes on it. And then you can let the dividends pay back the loan. Now, STRC has another advantage while we're looking at this, is that it's tax deferred income, which means you also don't pay taxes on as long as you don't sell the STRC. Something to think about. Even better. Okay, now we're moving on to something a little bit more aggressive. And that is BTCI. Now, this is a little bit anti what I'm normally about, but like I'm starting to as I'm de-risking, move into these positions because this is one that is also on my list. And that is going to be BTCI. Now, what is this? This is a targeted benefits of Bitcoin BTCI it's BTCI is by Neos. It is a high yield dividend ETF. The distribution rate is 0.2 or is 28.05%, which is pretty awesome. That's actually pretty extreme for most of you. It's pretty low for me right now. But as I'm deleveraging down, we're starting to put some of these positions in my portfolio as well. It pays out monthly. As those of you who know, who have been following the channel that rock out with me, understand that I do weekly. I like weekly payers. It's a little bit more work, a little bit more volatility. Actually, it's a lot more volatility, but the pay is so much better. And it comes in weekly, and I can make my maneuvers weekly, and it is what we're building my current income off of because I am just a brokey, and I can't help it. So I'm filtering in as we're deleveraging, though. I'm filtering in some more monthlies. So this is one of the ones that we're filtering in, and this is going to be the base of our income layer. Now, I don't like building out very massive portfolios. I like about like 10 workhorses. And for me, it's a lot easier to manage that. So 1, 2, 3, 4. So this portfolio this is hypothetical strategy that we're putting together that's based off of what I'm actually doing is 5 positions. You only got 5 places to put some money. Now, we're down to the last $250. And actually, it's 4. It's 4 positions. And I'll tell you why. So this is going to be $250. So I did this math based off the last $250. So BTCI, they do options on Bitcoin, on the Bitcoin ETFs. So this will fluctuate also with Bitcoin. Again, everything touches Bitcoin. Bitcoin is the end of the road for us based on at least my financial ideology with that I am following. Let's take a look at what this one does. Now, this one I have drip and no drip loaded. But in 5 years, doing the 250 a week, now this is what we're doing with the rest of the money. You just got to put it in one place. And I'm going to have one caveat for this that's going to go along as a bonus. Actually, I'm not. I'm leaving that off. We'll talk about that because they haven't even paid yet. So we're going to leave it here. So everything else goes into BTCI. BTCI. So what we've got, and this is with the NAV erosion built in. So we've got an initial investment of $250. Dividend amount gets paid monthly. We've got our dividend growth rate, which is minus 25.44%, and the share growth price of minus 22.11%, which obviously we're coming out of a Bitcoin bear market, so this has been taking a beating. And the numbers are over the 5 years. It's like we're looking at year one. You've got an annual dividend income of $2,000, $2,058. End up with 456 shares. And if you do no drip at the end of the first year, that puts you at 12,736. If you do drip, that's going to sit you at about 12,786. So the no drip actually is pretty close. You're about $1,000 off if you start utilizing this income. Now, the interesting thing is how this compounding works. Year two, you're at $25,799 with $5,347 in dividends. Year three, you're at ending balance of $38,840 and $8,248 in dividends. Now, year five is pretty interesting. You're at $12,000 in dividends. Now, if we add that in with where you're at year five, you're at $16,000 in dividends. Now, that's not being fully invested. That's putting $500, which per the person I talk to, every trucker should have every week because you guys get paid weekly and you're high earners. That's a hot 500. And that's just doing nothing. Now, that's at the end of 5 years. You could borderline, and then honestly, if you start transitioning over to getting fully invested and kicking these numbers up, the compounding happens even faster. Like that's where I'm at. I invest everything up front, and then I pay my bills out of my margin. Now we're going to get to the bonus part, which is the let me see here. Where are we at? The levers that you also have once you start utilizing, if you start utilizing and not reinvesting your distributions. One of which is you can use those distributions in a hypothetical cycle. You use those distributions and buy Bitcoin. You just take the distribution, you don't reinvest it, you keep doing everything in this plan, and then you take those distributions, you put them in your checking account, you take it over to Strike, and you just buy spot Bitcoin. And just keep buying spot Bitcoin. That's one of the potential strategies. And honestly, a pretty decent one considering that that'll get you to their minimum threshold of $20,000, because at $20,000, this is the actual bonus. I'm going to go ahead and get me full screen. Actually, I'm going to pull Strike back up for you. $20,000 in a lot of places is the minimum that you have to have in Strike to be able to take a loan against your Bitcoin. Now, again, loans against your assets, against your collateral, are not taxable. What you do with those loans is up to you. What we do over here in the wolf pack, we use the collateral to get cash to buy more assets. Now, being fully invested, I live out of my brokerage. So when I take those loans out, I take an additional 10%. I buy Bitcoin. It goes over on strike right now because we're trying to get to that 0.25. After we get to $20,000, that's going to open up a $10,000 flywheel. And what you can do with that is now you take that $10,000 from strike, put it into your brokerage account, which in this scenario, we're setting up on Robinhood. So you take the $10,000, you have it go to your bank account, which you can set up over on Robinhood. They have banking services now. It hits that account, put it right into your brokerage. You bolster all those positions. You can do the exact same breakdown that we did with the 500, but now the number's larger. So it's 10,000. So you take 30% of that, 10% into iShares, IBIT, 10% into MicroStrategy, and 10% into Strike. You take the rest of it, dump it into BTCI. Take all of your dividends, pay the loan back. And then after the loan's paid back, you do it again. I mean, this is and then you just keep bolstering that up until your account is producing enough to where, like now you can flywheel this loan every 6 months. The loans from Strike are a year in duration. You can either pay it monthly or you can pay it lump sum. Now, doing that, you're probably going to have to take a little bit of that $500 that you're investing to pay the final part of the loan off. But what you're able to do is you're able to front yourself $10,000. You could also do it strategically. Bitcoin drops over 20%. Then you deploy the loan from Strike. So that way you can really go in on those dips. That's a little bit more strategic, but like me personally, whenever any of my loan opportunities open up, that's where I'm going. I'm like, I'm going to go ahead and get this money. Like I'm going to strike while the iron's hot. As I said, like we saw what happened as Bitcoin being fully invested. It's a little bit easier. As Bitcoin dropped, I started hashing out more into buying amplified Bitcoin exposure. I didn't even buy more Bitcoin. I was like, I want the leverage Bitcoin now. Like I'm going to go buy the treasury companies because that's a better deal. And then when it swings back up, I can clip some profits off and use that to buy Bitcoin. Oh, but Bitcoin price went up. Yeah, but the price of the stock went up 2-3x that. It all depends on how you want to play the game. Like one way or the other, it's like, hey, the stuff's getting where it needs to go. That's basically what I've got. I'm hoping I touched on everything. I'm probably this month's portfolio update, I will dive more into these concepts of the foundation, the collateral layer, and the income layer, because those are concepts that I will be revisiting, because those are the three deals that we have. And the last one that I would add to it, to be honest, is the flywheel layer, like the levers that you have to pull, the leverage that you have. Like my credit cards are a flywheel layer. And actually, that's what's going to be next week's episode. I'm going to do an episode specifically on flywheels and the concept behind that, how I use it, and the benefits thereof, and the results that I've got. So we'll do that, because that is probably the fourth layer. But for somebody just starting out, for my blue collar workers, specifically, but if you're a high earner, period, this system can work. The math is the math is the math. I think Bitcoin is either going to $0 or $1 million. And if it goes to $1 million, it's going to $10 million. So this doesn't have to just be for blue collar workers. And for those of you who are not high earners, I'm not a high earner. My W-2, I do not make a higher. I make average money. Sometimes I work a little bit extra and I make a little bit extra money some years, but overall, if it wasn't for my portfolio and the way that I invest, I wouldn't be able to navigate the way that I'm navigating. But that also started somewhere. So you can take this methodology and scale it down. You can watch the other videos and see some of the riskier stuff, because honestly, for me, it's like you got to swing for the fences a little bit if you're not making the income that you need to supplement the income that you need. And then after you get in the realm of where you need to be, then you can de-risk into something like this. Because for what I'm doing personally, this is actually a very low risk play. The issue is the time. Like, I want to be able to not have to go to work in 16 months. Like, we're on a countdown. That is something I am capable of doing. Now, if I wanted to wait another 5 years, then this plan, I could just convert everything to this and build off this. That's not gonna work for me. Like, I have a debt load that I'm working on, and maybe after we get the debt paid off, cool. But as it sits right now, that is just not in the stars for me. It's not something that I'm going to be able to do under the current circumstances and keep the timeline that I'm on. And so if you're on a smaller timeline, you got to up the risk. So we're in a little bit higher risk, a little bit more work, but this is nothing that I haven't navigated before in the DeFi space and crypto. And doing it on the TradFi space side is easier for me personally. So that's what I'm doing. But the important thing is these concepts scale. If you're not making over six figures, you just probably don't have $500 a week to throw into this. Now, I've done an episode on being fully invested. If you are capable and you're not a high earner of going fully invested, this could be a play for you. If you don't have bills, if you're in your 20s and you live at your mom's house and you don't have bills, you have minimal bills, this could be an option for you, because then you can live out of the margin. Then you all you got to do is be good with your money. If you're not financially literate, all of this is going to be bad for you. If you're not financially responsible, if you're not financially disciplined, this probably isn't going to work for you. But for those of you who are, scale the numbers down. It doesn't have to be 500 a week. It could be 200 a week. And maybe it takes you 10 years, but you're 20. Now you're abutting not having to go to work by 30, provided that you're not out here doing this, all the self-inflicted wounds, making babies, producing single mothers, being a single mother, buying cars to impress people, wanting to go get designer stuff because you have access to some capital instead of focusing on the mission. You could be out of the rat race before I am. I mean, I'm going to be out at what? 43 and a half. That's not bad. Most of you aren't going to be retiring ever. So yeah, or you're going to be trying to retire at 60 and then you're going to have to go put the fries in the bag, or 70 or 80 or whenever they decide to let you stop. This strategy scales. The calculator, drip calc, is there. You can figure out exactly how long it would take for you to replace your income now. Obviously, you're going to hope that it grows over time, but like going fully invested, this scales pretty quick when you got your whole check, when you got your whole salary going into it, and then you're paying for stuff out of your margin. Just saying, like it scales pretty quickly. I don't know how fast this would scale. Actually, you know what? We'll do a bonus. So I want to do a bonus, and we're going to go specifically with let's just say we tried to do this with just BTCI. I think that might be interesting. Actually, yeah. No. We're going to do two things. We're going to go. All right. So we'll say the initial investment. Let's see here. Let's do something realistic. So this is bonus time. Okay. I'm going to do this real quick. And then I will get up out of your hair. Bonus time, and we're going to do this based off of Stretch and BTCI because we're in the high income space, or we're in the income space. So 3 times point. Okay. That's going to be monthly also. So I got it. Oh. So this is going to be interesting. 543 point. Okay. Calculate this. Oh, interesting. All right, we're going to give some real numbers here. Okay, so I'm going to pull up Strat. Oh, I already got BTCI pulled up. So BTCI puts us at 5 years. Oh, geez. That is crazy. Yeah, as soon as we get this done, I might have to, when I switch over to my Robinhood account, this is probably what I'm going to do. So that puts us at, in 5 years, $137,774. And actually, I want to look at what this is with no drip, which will put us at $136,000 with no drip on year 5 with 84,000. Oh, that's total dividends though. The annual dividend that year would be $27,479. That's what we're producing a year. Now let's take a look at what we were doing with Stretch. Now Stretch would put us at, with drip, an ending balance of $76,196 in 5 years and an annual dividend of $7,670. So if we did that for 5 years, just those two things, that's a 30-70 split, 70% in BTCI, 30% in Stretch. We're looking at 27. We're looking at $35,149 a year of capital that we would have access to just off those two. That's factoring in no growth and a little bit of NAV erosion off BTCI. That's crazy work. I mean, you can stack up $100,000, and those are real numbers. That's what would happen if I just took my entire check, staying fully invested, and just went into BTCI and Stretch. Wow. Now, I'm not waiting 5 years, but that is awesome. Now, the other thing in closing, we'll go ahead and close this out. The other thing that I find interesting about that is doing that, the projected annual amount is less than what I'm making now with less money, but the risk is way less, which is, it's one of those things that you gotta, like I said, as I'm de-risking, I'm now seeing the importance of having my stretch allocation stop liquidating it maybe as much. And we'll be getting some BTCI added into the portfolio as well. Like I'm definitely going to be adding that to one of my regular purchases, so that way when I'm de-risking, that's something that I can go into. Until next week, people, it's your boy Reckless Ray Dinero, and this has been another great Bag Talk episode. I hope you guys got value out of it. Definitely tap in with me down in the comments and let me know what you guys are thinking. Give me some feedback on that. Is this type of content you guys like? I know the person who requested it's going to like it because we talk about this stuff all the time. But I've got to, I'm going to shoot this out to all my trucker friends and so that they can see some of these numbers, because like I don't have to do any work doing this. Like that is you're not having to be in the market. You just put the money in the places. Like that's all you got to do is just do that. Now, one of the things that I would say is, me personally, considering I'm not trying to have to work for forever, retirement accounts are not something that I utilize heavily. I barely utilize them at all. The only reason I would utilize them is if I was in a position to where I was making too much money. Because it forces you to wait or be penalized for using the money. And I don't want to play that game. Like, I just rather pay the taxes and use the money and be done with it. So that way, when I'm ready, like I can be like, I can quit now. I don't have to come in now. In 16 months, any day, any given day, I could just be like, I'm not coming in. And if that entails not being employed here, it doesn't matter to me because I'm in control. Like, the income's not going to stop. All my stuff still gets paid for. So that's the reason I'm not a big fan of retirement accounts. I don't see them as anything more than a tax shelter if you are a high income earner. Like, if you're making $130,000+ a year in your W-2, then like, yes, max out your 401k for whatever they match it for. Do whatever you got to do. But if you're trying to not do that job early, your 401k and your Roth might not be the greatest ideas, because there's specific times when you can start utilizing those. So, it is what it is. Now, yeah, and we're going to close on that. It's your boy, Reckless Ray Dinero. Do not forget to hit that like. Do not forget to subscribe. For those of you who rock with me this long, definitely tap in with me down in the comments. I will read them. I will reply to them. I will give thought to them and take your feedback. Also, don't be afraid to hit me up and ask for requests, because I did do this one. Shout out to Michael, the homie. This was for you, bro. So I hope you guys enjoy it. This is another episode of Bag Talk. Great episode, obviously. Chock full of information that hopefully you apply. The channel is Future Financial Strategies. And until next week, I am out. Peace.
Money on my mind. Yeah. Focus, got no time for games. Nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.